chart, and in this 1 hour chart we are using this moving average. This is the green line. Since the price was trading below this green line, we can say that the price is trading in downtrend. So this is for this only purpose we are using the 60 minutes period. So since now we had identified that the price is staying down, that is the market trend was down. Now let us move back and see what happened yesterday. So now the chart which you are viewing is an 15 minutes chart which we used for yesterday's presentation. You can see whenever I place the cursor on any particular candlestick, you can see the date and time below. This is the area where the price opened yesterday. Yesterday the market opened around 6,740. This was the area where the price opened yesterday. And the yesterday's price opening, first initially what we saw that the price was trading below the 60 period moving average, which indicates the trend is down. Now the second most important thing is we should use this open and high low close analysis, which means that we should see where the price opened yesterday. The yesterday's price opening was just below the previous day's price closing and also below the previous day's high, which means that the momentum for selling is still on. For example, if the price opened above the previous day's price closing and it is trading above this previous day's high, then we can say there is some buying that is happening in the market. Since the yesterday's price opened below the previous day's price closing, you can see that, and it was trading below the previous day's high, what we can expect that the price has got the ability initially to test the previous day's low. If the price is successful and if there is a momentum and if there is lot of buyers who can push this or break this yesterday's low, it can create a new low. So that is how we are going to analyze the price action. This is called analyzing open and high and low and where the price closed for the particular day. Now we are going to do the same thing for the yesterday's market. So the yesterday's price opening, you can see it was below the previous day's price closing and it didn't created a new high, which means on the previous day the market high was 6,780. You can see the time. But yesterday the price didn't create a new high, and what happened is that after the price opening the price came down. You can see the price came down, and what really happened was the price tried to test the previous day's low. You can see the price was testing the previous day's low. There was some buying happening, so you can see the price just moved up, but it could not create or stay above the previous day's price closing. Here is the previous day's price closing and it didn't created a new high compared to the previous day. So the price came down and we had marked the target zone yesterday. So if the price is coming down, we had mentioned that the price has got the capacity to reach 6,660. So the price came down and even it was quite successful in breaking this low, and it created a new low compared to the previous day's price action. So the previous day's price low was 6,722 and the price created a new low, and the most important thing is the price closed near the low. You can see the price closing was around 6,640. On seeing this, now this is what we call as open. We analyzed where the price opened compared to the previous day's close, what is the high compared to the previous day high, and what is the low compared to the previous day's low, and where the price closed compared to the previous day's price closing. Now let me sum it up. Initially we saw a 60 minutes candlestick. You can see this was 60 minutes candlestick, and we identified the trend. Since the price was trading below the average, we identified that the price is staying down, so the trend is down. Now this is called a cross section. After looking and after identifying the trend using the 1 hour chart, now we are looking for the analyzing the open and high and low compared to the previous days open, high, low. So on looking at the entire price action yesterday, we can come to a conclusion that the price was completely dominated by the sellers. In order to have a detailed explanation, yesterday we had posted a video where we took into account all the previous days price action. If you have any doubt, please go to our yesterday's presentation and see that. So what we can do today? So there is no doubt, the most important thing is the price opening. Where we are interested is today's price opening. There is no doubt on seeing the yesterday's price action, and you can see the price opened lower, closed lower, and it created a new closing. You see the comparing the closing, new low, and everything shows that the market is for selling. Market can continue selling. So today's price opening is going to play a key role. How? So if the price opens, now here comes the probability on seeing the international price action, and we can come to a conclusion that today's price opening can be near the previous day's price closing or within this 6660. There may be few changes on price opening based upon the rupee factor also. Nowadays, the rupee is playing a major role in deciding the price opening. So there may be some factors considering the rupee, but if the price opens within this zone, now let us take into consideration, if the price opens within the zone of 6640 and 6620, which means that the momentum for selling is still on. So what normally the price will do is that this is going to be our key area. Here I am going to mark this in order to identify this key area. So you can see this is going to be our key area. What normally will do is that the price, if the price is opening here, it should take resistance in these key areas. So it can take resistance in this area. So the price, the next target level, if the selling continues, we had marked 6620, and again if the selling continues, we had marked the next target zone as 6560. How we had identified this target zone? Because based upon the our experience and previous historical data, we had identified this can be the possible zones where the price can reach the next target. So today, we can come to a conclusion that today the market can stay in downtrend. The most important thing is today we have crude oil inventory report also. So make it very clear, this is going to be the key zone. I marked this in the blue color box, because why I had marked this, that this was yesterday's or the previous days. You can see the low, and also on seeing the yesterday's price action, the market struggled in this area for a lot. So this should provide a good resistance. But if the price is going to break this zone, and if it is staying above this, then it will go and test the previous day's high, which is 6780. So today we are expecting crude to continue its downtrend. Let's see what's going to happen during the trading session, and thanks a lot for watching our videos. Happy trading, take care, bye.